welcome to this video. Today is the 18th of March 2019. It's 5 to 9 local time. What you see here is the pound dollar on a 4-hour chart. It's trading around the 1.3 to 5 level. And I like to do those kind of videos now and then just to demonstrate concepts I have explained in the educational videos. The ones who followed me, they know that I document trades on the other channel, and on this channel I concentrate on explaining certain concepts of the so-called market causality. As you know, I've spent quite some time on exposing the market manipulation games conducted by the smart money cartel, and I think this is a good situation where I can remind you of certain aspects. Remember that, generally speaking, I do not recommend anyone to place position trades or swing trades or long-term trades in markets which are, driven by historical or fundamental factors. And of course, looking at pound sterling and pound dollar, the world's oldest currency, you will know that right now we have such a situation, okay? We still do not have a solution to the Brexit problem. Time is running out. So far, the UK and the EU could not agree to a Brexit deal. So that means that a no-deal scenario is still not off the table. And even though the likelihood that a no-deal scenario would take place is a bit lower than some days ago, it's still a possibility. And I would like to remind you that, in a situation like this, you can have politicians making unscheduled comments every day, every night, and those comments can be exploited by the smart money algos to conduct exaggerated phishing moves in both directions. So you will be a sitting duck if you are on the wrong side there. So let me warn you again. Do not, place big long-term position trades in those kind of markets, and do not accept this kind of directional risk where like a big fishing bar can take out your stop even though it was placed at a good level and not close to the price. Just because, the smart money algorithms have an execution advantage, an information advantage, a transaction cost advantage, a speed advantage. They are the first ones to use the plausibility principle in their favor. Okay, they are the market movers. They can actually change the price as they wish, and this is what can happen in such a scenario anytime. Now, that being said, you can see that at the high around the 1.3377 level we have this big medium-term stop accumulation of the dumb money shorties, and of course you can see that on the 4-hour chart we have dumb money short activity, which is the reason why the price was pushed up and this high was cleaned. But now, as you can see on the y-axis here, we have some dumb money traders trying to trade a breakout to the upside, so they bought at the high, and we have those shorties trying to basically trade depreciation in the pound, which would be the scenario in case there's really no deal, and on the 29th of March there's no extension neither. It's not the most likely scenario, but it is possible. So on top of that, you have to understand that everything in between in terms of phishing can happen. So even though if the smart money decides to let the price move in a consolidation between those two dump money position nests, and using the time and range principle to their advantage, there can be big moves once we have a resolution or we know what's going to happen with regards to Brexit. So that means that in the case that, for example, the UK and the EU finally agree to some kind of Brexit deal, the scenario would be that the smart money goes for the stop accumulation of the shorties. In case of a no deal scenario, they may fish up to just take out the shorties with tight stops and then go all the way down, even if some of the shorties are let into profit. In such a case, we could have some dumb money tolerance. Now, if you're interested in understanding those more advanced topics, I suggest that you check out the video course on the website, because there, you know, I will cover all the meta levels to the market causality. I do not cover those kind of topics here on the YouTube channel, but you know, I will still, like on this channel, next to the educational videos, I will drop like a video like this where I basically demonstrate how the concepts can be applied to live charts in current situations, you know. So I think the response to that was quite positive in the past, so that seems to be something people are interested in. So in a nutshell, I do not recommend you to, you know, insist on big position trades and to accept all the directional risks at the moment in pound dollar or euro pound, yes. And you know, unless of course you're like a day trader, intraday trader, and you may just do a quick scalp and you have a very tight stop and you try to avoid the scheduled news, yeah, you may be able to do some short-term trading, yeah. But whenever you try to place a big position in terms of direction and to hold it over weeks, be careful, because even if your analysis was correct and you know your trade implementation was not too bad, still you can be hunted and fished out by, you know, just a news comment move, which is then, you know, used by the smart money algos to conduct a big fishing bar and, you know, to just fish you out, and then, you know, they may even revert back into the range. You know, all these things can be observed if you conducted some historical analysis on markets, or if you're an experienced trader, you know exactly what I'm talking about. So, you know, the smart money likes to cover as much range as possible. They like to, you know, really clean out all the significant stop accumulations on both sides. Yeah, that's what they are good at, and that's what they do day by day. So yeah, I would expect pound dollar to, you know, be limited by those two dumb money position nests, and then depending on the outcome of the Brexit situation, you know, the smart money will be able to do a move respectively, as I've explained. But since there's low tradability, I do not recommend you to have, like, you know, a big directional position in such a market, in such a situation at the moment, where, you know, none of the two sides has committed to an extension of the situation, or, you know, to some kind of exit deal. Okay, stay safe and all the best.